In this video, a fascinating and insightful roundtable featuring a couple of Tesla bulls many of you will be familiar with, Gary Black and Pierre Ferragu, on the future of transportation, which probably just should have been called the future of Tesla because it's the same thing, get it? I'm not going to explain that. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. So here we are, this is the Barron's Roundtable. Quote, the future of transportation. It's more than Tesla. Not so sure about that. Our first ever transportation roundtable explores what's next for electric vehicles, autonomous driving, ride sharing, and more. Definitely sounds like we're describing the future of Tesla, right? Quote, we once thought the future of transportation meant George Jetson's flying car. Instead, we got Elon Musk's Tesla, the company and the electric car, whose twin successes jolted the global automotive industry and are speeding the eventual demise of the internal combustion engine vehicle. Guys, hello? Eventual demise? Bruh, are your eyes closed? Is your brain not on? The demise of the internal combustion engine is here. Sales are collapsing. They're falling off a cliff. Of course, the legacy automotive manufacturers are blaming supply chain challenges. I'm here to tell you, ICE vehicle sales will never recover from their previous peaks, okay? They're in free fall. Anyway, let's continue. One might think from the stock market or Twitter that Tesla and electrification are the only things that matter today in the world of transportation. Guys, make sure you're sitting down for this. It's fucking hilarious. But there's a lot more to the story, including autonomous driving. You mean the thing that Tesla has an unassailable lead in? Ride sharing? You mean the thing that Tesla's on the cusp of launching? Robotics? Wait, you mean the things that Tesla produces already? The robots on wheels? Their vehicles? And mobility technology? You mean, I'm not even going to name just a few salient trends. Now, I don't want to be too hard on the author of this article here, but let's be real here. The a lot more to the story are all things that Tesla is dominating. So the panel includes Gary Black and Pierre Ferragu. Most of you will be familiar with them if you're a regular viewer of the channel. Two legends, two Tesla bulls, two guys who really seem to get it. Yet, despite that, neither of them include any value whatsoever for Tesla successfully solving autonomy in their Tesla stock price targets. Barron asks, what are the most important trends in transportation that investors need to follow and understand? Gary Black responding, the number one trend is that EV adoption is exploding. Great point, Gary. Battery operated EVs were about 6.6% of total industry sales globally last year. We estimate they were 9% in this year's first quarter and will be about 30% in 2025, rising to 60% by 2030. Now, I strongly disagree. The premise, I totally get. EV adoption is soaring, it is exploding. We're on the same page here. The rate of adoption, I think many, in fact most, are massively underestimating. It's a simple equation. 1 or 2 years' time, an electric vehicle will be around sticker price parity versus a comparable ICE vehicle. EVs today are already much cheaper overall through the lifetime of ownership to own and operate, low maintenance, much less cost to recharge versus refuel than an equivalent ICE vehicle. So over the lifetime of ownership, EVs today are already as cheap as an ICE vehicle. But once EVs reach sticker price parity with comparable ICE vehicles, it's game f***ing over. Consumers will literally need to be dumb not to buy the EV. Why? It's the same price or cheaper to buy. It's much cheaper to own and operate. Plus, by default, there's a lot of benefits to EVs. Better performance, better handling, better safety features as well. No engine means more crumple zone. Battery on the floor means lower center of gravity, blah, 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 blah. I understand many people have major difficulties grasping just how quickly EV adoption is going to take place. But please, riddle me this. If what I'm saying is true, and if, let's be a little bit generous, let's say by 2025, 3 years from now, 90% of consumers would have to be an idiot to buy an ICE vehicle over an EV. At that point in time, are there going to be enough idiots out there buying ICE vehicles, knowing that it's going to cost them more in terms of sticker price and significantly more to actually own and operate, plus they know the vehicle pollutes, plus they know it's less safe, plus it performs worse, blah, 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 blah. Are there really going to be that many dumb consumers out there? I don't believe so. Now, don't get me wrong, there will be some, and of course there's going to be exceptions to the rule, and I'm sure there'll still be ICE vehicle sales for years to come in third world countries. But when we're talking about global trends here, the idea that EVs would only comprise around 60% of new vehicle sales by 2030 to me is absurd. Can't imagine this being any less than 80+%, maybe 90 or more. Again, I know some people will have a hard time with this. The rate of adoption sounds insane, but I don't see it playing out any other way. In addition, as legacy automotive manufacturers start to notice their ICE sales collapsing, which they're already doing, in fact, let me show you something to prove my point. We're currently looking at vehicles sold in the United States by Ford following the global financial crisis 2008-2009, a pretty strong rebound, sales peaking around 2015-16 or so, and now collapsing. And I mean collapsing. Of course, everyone's going to argue, oh, it's just supply chain, don't worry, everything's going to be fine. It's not. We're already seeing the collapse in ICE vehicle sales. And I mean collapse, not slow down, collapse. This will only accelerate. People are massively underestimating how quickly, how violently, and how completely the bottom falls out of ICE vehicle sales. Here's Government Motors. Same trend, peaking around 2015, 2016, and collapsing. In 2021, by the way, 2022 is even worse. In 2021, Government Motors sold about 60% as many vehicles as it had at its peak in 2016. The number 2 trend is autonomy, and it involves 2 factors, self-driving cars and robotaxi. An industry will develop around summoning a self-driving car that will take you where you want to go. Third, Tesla has developed a direct-to-consumer sales model within the EV industry. It avoids dealerships, aka stealerships, and uses social media instead of advertising. That's a big trend we have to pay attention to. And now some comments from Pierre Ferragu. Quote, to me, the most important trend is electrification. The first order of transformation is that an oil-consuming, polluting powertrain is being replaced by an electric powertrain, itself a monster evolution of a $2 trillion industry. Then there is the spin that Tesla is bringing to it. Tesla is revolutionizing this market the way Apple revolutionized the $50 billion mobile phone market. It is redefining the category and attracting a large number of buyers to a significantly more expensive, higher value product. Let me know in the comments below if anyone who purchased a Tesla spent more on the Tesla than they've ever previously spent on a vehicle. We're seeing a lot of people stretching up into a Tesla. This is a recurring theme. Pierre makes a great point. Second, the gig economy and more autonomous mobility are transforming personal transportation. This means delivery eventually can become real time and cheap. Pierre makes a great point, and think about the potential implications. A few more comments from Gary Black. Quote, we are bullish on Tesla because it is the market leader. Tesla has about a 20% share of the global EV market. As the total addressable market expands for Tesla, as the company launches its Cybertruck pickup, an under $30,000 EV, cheaper versions of its best-selling Model Y, we think it can hold its EV market share. The total addressable market for EVs is growing by about 50% a year. So even if Tesla just holds its EV market share, it will keep growing by about 50% per year. This is a very important point to understand. Tesla can maintain its approximate market share today. As the market grows, Tesla sales can grow massively as well. Barron's asked Gary Black, what's his Tesla stock price target? Gary responding, our target is $1,600 per share. We estimate total global seasonally adjusted annual rate of auto sales of 80 million vehicles a year by 2026. I'm not so sure about this. I'll expand in just a moment. We estimate EV adoption at 36% by 2026 and assume that Tesla will retain 20% of the EV market. I do believe it's possible that 80 million vehicles could be sold in 2026, but I don't think it will happen, and here's the reason. Again, ICE vehicle sales are collapsing. By 2026, you'll literally need to be a fucking moron to buy an ICE vehicle over an EV unless you're the 0.001% exceptions to the rule. ICE vehicle sales will have plunged off a cliff by mid-decade. This means that the overall automotive market is going to violently contract, at least for a period of a few years, until EV volumes can ramp up to fill the void. And until that point in time, it's quite possible we'll see average selling prices of EVs head to the moon. We're already starting to see this. Insane demand, not enough supply to meet that demand, prices to the moon. Boy, I'd love to be a company that's already profitably producing EVs at large scale. I think they do very well in a situation like this. So I could be wrong, but I actually personally believe the global automotive market is going to contract violently in the next few years before rebounding. I'll be fairly stunned if we see 80 plus million vehicles sold in mid-decade. The only way that I would see this happening is if automotive manufacturers can massively, and I mean massively, increase their EV production. That means Tesla will deliver about 6.2 million vehicles by 2026 versus less than a million last year. My estimates for Tesla deliveries in 26 are a little bit higher than this, but not enormously so. Key differences here is my assumption is that Tesla is actually capturing a much larger slice of the global vehicle market because, that's right, total sales have collapsed. It's a much smaller pie, temporarily. We estimate that Tesla will earn about $55 a share in 2026. For the record, my base case, available exclusively on Patreon for supporters at the investor level and above, is approximately double this number. But Gary isn't considering any autonomy, any Tesla bot, nothing like that. I am. I'm not even going to mention my bull case. We assume the stock will trade for about 45 times earnings versus 75 times earnings today. That gives us a price of about $2,475 per share. Discounting that back at a 12% cost of equity gets us to a $1,600 price target today. Pierre, you're also a Tesla fan. Explain your bullish view. Pierre responding, electrification is a dynamic system in which the more adoption you get, the more possibilities there are for people to buy new cars. At this point, demand for Teslas has vastly exceeded existing capacity. I'm focused on supply growth. Today, Tesla has to increase prices almost every month to rein in demand and try to get away from a 9 to 12 month lead time. Now, let's take a moment to discuss this because one, it's true, and B, it's very fucking important. Pierre's absolutely right. Tesla has been forced to constantly raise prices on their vehicles just to keep the insane wait times in check, and they're not really succeeding. Honestly, imagine waiting 9 to 12 months to take delivery of a vehicle. It's just absurd. But I mean, what else are you going to do? Tesla's stuck between a rock and a hard place in a good way. They have no choice but to raise prices on their vehicles and make even more obscene profits, at least over the medium term. The company is rapidly increasing the cost efficiency of its manufacturing operation, and the cost of assembling a car is falling fast. The only constraint over the next 5 to 10 years will be manufacturing capacity. I completely agree, Pierre hit the nail on the head. Most people don't seem to get this or believe it, but I'm on the same page. In my opinion, Tesla will sell every single car they produce for the next decade or more. Now, there's some dingbats, oh, what are you talking about, man? Not possible. Let me explain, okay? The more vehicles they make, the more they improve their manufacturing capabilities and so on, the cheaper each vehicle is to produce. Therefore, if they need to, they can lower the cost of their vehicles. And an incremental decrease in the price of a vehicle creates an exponential increase in demand for said vehicle. It's pretty simple. There's a great quote here from Pierre. Quote, Tesla is innovating 8 to 12 times faster than anyone else in the world in terms of manufacturing. It continues, if Tesla maintains the current pace of growth in its production capacity, it should be in a position to sell about 20 million units in 2030 versus barely 1 million last year. In the meantime, Tesla is leading the charge on the three most important fronts, which are on the demand side. Their cars are the most appealing. That's a massive understatement. They have the best charging network. That too is a massive understatement. And the best visibility. Yeah, you guys know where I'm going with this as well. On the technology front, Tesla innovates at an unheard of rate. Again, brilliant point from Pierre. The last aspect is that Tesla is accumulating scale. Even if some other companies manage to move faster in the early stages of EV development over the next few years, Tesla will still have a significant advantage related to its expenses and scale. Again, extremely important point worth expanding on. This is why I continue to say that Tesla's lead is unassailable. Nobody can catch up to Tesla. Tesla has so many advantages in terms of scale, they've driven their costs down much further than anyone. It's literally not possible today for any company on planet Earth to make a comparable product to what Tesla does, a comparable EV, for a comparable price. It's just not possible. This means that Tesla has an unfair advantage. They will forever either be able to sell vehicles and make a much higher profit than anyone else in the industry, or they'll have the option of making a comparable profit, in other words, a similar margin, but they'll be able to sell a comparable vehicle for a much lower price to consumers. Again, if you're a consumer and product A is equivalent to product B in everything except for the price, and product A is significantly cheaper, once again, what do you need to be to buy the more expensive product? An idiot. And I know there's plenty of idiots on Earth, but I really don't think there's that many. So, what is Pierre's Tesla stock price target? My price target is $1,580 per share. Some more comments. Between now and the end of the decade, Tesla will be a hyper-growth business. It can grow its cash flow by 30% a year. I arrive at my price target by applying a multiple of 75 times forward earnings, and I expect earnings that are 30 to 50% above consensus in the next couple of years. Makes two of us, Pierre. Barron's asking, what happens once Tesla can make 2 million cars a year but only sell 1.7 million? Pierre responding, I don't have a strong conviction that will happen over the next 8 years, and neither do I. Tesla will need 2 to 3 years to meet that demand with cars at today's price points and will continue to generate 30% gross margins. In 3 years, Tesla will have a car price at $25,000, which will extend its addressable market to more than 50 million units per year. I don't know when the company becomes demand constrained, and great point once again from Pierre. It's real simple. Tesla makes more vehicles, they benefit from economies of scale, they continue to innovate in manufacturing. Again, EVs are a very new technology. Most of the costs haven't yet been driven down as far as they'll go. There's huge room for improvement everywhere you look. When Tesla can produce a vehicle for around $18,000, sell it for $25,000, in other words, a 30% margin, their market explodes. Tesla could, in theory, I'm not saying they will, but they could, in theory, sell many tens of millions of electric vehicles per year as soon as they reach this price point, which is just around the corner. Pretty simple if you think about it, but a mistake many people make is not thinking about it. A lot of folks think that Tesla vehicles are too expensive. They are for some people today, but that will not be true in the future. It's literally in Tesla's master plan. Gary Blake pointing out some painfully obvious facts. Quote, Ford and GM are going to struggle. Ford's new Mustang has gotten the most traction, but even then, the company can't produce enough. ICE vehicles still account for 91% of industry sales. Ford and GM have deliberately tried not to cannibalize their base business. That's a mistake. I would argue that is a fatal mistake. By the way, this roundtable includes opinions from 4 people. However, some of them, well, I'm not going to spend too much time on these because, I mean, a bit of a clown show, but just to give a bit of an idea, Jolly here suggesting GM generates about $150 billion of revenue, blah, blah, blah. Let me share a secret with you guys and girls. There are certain things that people can say, certain opinions that they can hold, that to me will immediately and permanently write them off for ever being taken seriously. This is one of those points. Jolly here says, quote, "To me, GM stock could be a great value play." Hey guys, please set a reminder, check back in, let's say 10 years time, early 2032 on this video. GM will be bankrupt by then. Jolly will be rather embarrassed about this appalling, and I mean appalling suggestion. In fairness, the word could, not will, was used, so good little get out of jail card, but holy f***, I mean, anyone who takes this seriously will be anything but jolly. Gary asks Pierre, "How much of your $1,580 Tesla price target reflects autonomy?" Pierre, "None of it." Gary Black continues, "We put no valuation on Tesla's autonomy offerings either." And by the way, it's worth taking a moment here. Gary Black and Pierre, somewhere in that $1,600 per share 12-month price target for Tesla stock range, neither includes any value at all for autonomy. None whatsoever. Yet still, close to a doubling from where Tesla stock is as I record this. Something to think about. Gary continues, "Every innovation you've seen in the automobile in the past 60 years, whether automatic transmission, anti-lock brakes, or turbocharging, has been copied by all companies. It is hard to say that any one company will gain significant market share." This is of course referring to autonomy. While I understand Gary's reasoning here, it's evident to me that Gary doesn't have much of a grasp on machine learning, on neural networks, and how important data is to solving this problem. No disrespect to Gary, super smart dude. But on this, clearly ill-informed, like most investors out there. Might I suggest that anybody who finds themselves having an emotional reaction here, they feel like they disagree with me for some reason, go down the rabbit hole and watch every single discussion between Dave Lee and James Dowmer. You might need to set aside a few weeks, maybe even months to do that, but hopefully that will paint a slightly clearer picture. No one is catching up to Tesla, ever, in terms of autonomy. It's not going to happen. No one has the data. It's literally impossible for anyone to catch up and exceed Tesla unless they can somehow start deploying millions of data collection robots every single year like Tesla is already doing at scale, their vehicles. Some people don't seem to get this, okay? Automatic transmission, anti-lock brakes, turbocharging, these are things that are fairly simple problems to solve, fairly simple to copy. They don't require extraordinary amounts of data. I think the best way for me to describe this to somebody at a very simple level is this. Why is it that no one's taken down Amazon in terms of online retail? Why is it that no one's taken down Google in terms of online search? It's because they have unassailable data leads. It's as simple as that. Tesla's data lead in terms of autonomy, same fucking story. Some people don't get it. I totally understand that. It's fine. It's complicated. Understanding computer vision, neural networks, it's a deep rabbit hole. It's very confusing, very complicated. I understand that. But this is not how things play out. This is how things play out. At some point, automotive manufacturers realize, oh, you know what? Tesla was right. When they were trolling us years ago saying LiDAR and that was a bad idea, they had a point. Also, we've realized, their data lead is actually unassailable. There's no way we'll ever develop autonomous software that's even close to as safe as Tesla's stuff. Therefore, we have no option but to beg Tesla to license their software to us, and Tesla will say, sure, yeah, of course, we want to save lives. We don't want people dying on roads. Of course, you can license our superior, much safer, demonstrably safer autonomous software for a fee. My own Tesla valuation model, again, available exclusively on Patreon for supporters at the investor level and above, includes Tesla licensing full self-driving to other automakers in the future. Hope you guys and girls have enjoyed the video. I always find it insightful to hear some thoughts and opinions of other Tesla bulls, as well as the bears, although if I'm being honest, I think 99% of the Tesla bears out there don't really have any valid points to make. They just sound like deluded and or mentally ill nutters, and I really mean that. I'm not trying to be rude here, I'm just describing things as I see them. It's incredibly difficult to find a Tesla bear who makes any sense whatsoever. Of course, that's obviously just because I'm a deluded Tesla fanboy, right? One interesting note, neither Pierre or Gary Black give any consideration, any valuation whatsoever Tesla autonomy, which, in my opinion, will be worth more than the rest of Tesla's business combined. Even so, these guys have price targets $1,600 per share for Tesla stock in the next 12 months. Tesla stock today, not even $900 per share. That being said, it's also fascinating to see somebody as smart as Gary Black completely oblivious to the fact that Tesla's data lead in terms of autonomy is unassailable. The idea that other automotive manufacturers will just be able to copy autonomy, not fucking happening, dude. Like, really not happening. And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment. You'll instantly gain access to my my archive of well over 100 exclusive videos on every topic you can imagine. Plus, all Patreon supporters gain access to my up-to-date Tesla stock price targets all the way out to 2032. My targets do include autonomy. And for supporters at the investor level and above, you can also access my Tesla valuation model, which shows all the assumptions behind my Tesla stock price targets. So I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.